Hey folks, welcome to Verified Investing. My name is Gareth Soloway with a deep dive into the overall stock market. So what's going on here? We're seeing some big downside, also big bounces as buy the dippers have been very accustomed to buying and the market's going right back to all-time highs. So what is going to happen? Are we going to go back to all-time highs or is the market topping in a major cycle top? Let's dive right into the charts. We'll start right here with the S&P 500. So the first thing we have to look at here, right? This is the parallel that has basically allowed me to pinpoint the high on the market thus far. And what we see very clearly is this goes back to 2020. Here's our COVID lows, our bear market lows. Look at how it all lines along this trend line and the liberation tariff sell-off low, right? So we have that trend line. And when we extend it up a parallel to the bull market high, it literally gave us this top here. Let me flip over to the weekly chart so we see it a little bit cleaner. And look at that right there. That was the high. Now, the way technical analysis works is that you assume the levels are going to hold until proven otherwise. In other words, when you look at this chart on the weekly, right, and we see that the low here, we had that massive move up, and then it hit here and it got slammed down. And then it kind of hop stepped along this, went up and then slammed down and then went back to the high. We have to assume that we're going to have a major move down here. Now, in the near term, the analysis signals a retrace to our former 2024 and early 2025 high. So what I'm calling for in the near term is about 11% drawdown from this high down to this level, and that will bring us into the former high around 61.20 on the S&P. And again, notice how markets work. Markets will have a resistance level right along here. It gets rejected. It comes up, breaks out, and then hits the next resistance. Usually a rejection follows, and then we come down. And then the question is, do we go up back to the highs here? We could go back to retrace to that parallel, or at some point we could actually break down. But obviously we'll have to watch. What I do know from technical analysis is that that parallel has been significant every time we've either hit the low of the parallel or the high end of the parallel. They've been major market pivotal lows or highs. And so a technician thinks logically and says, okay, well, if that has been what has been happening, then we have to assume this is a major market top until proven otherwise, right? Now, again, we can be proven otherwise, but until that happens, we have to go with that. And so far, that's what's happening with the markets, right? We've had this beautiful sell-off. I think the S&P is only down about 4% off of its highs. So today's low was about 5%. So we kissed 5%. We've now gotten a bounce to where we're down about 4% on the markets. But the idea is 4% is actually a big pullback. If you look at from the liberation sell-off lows here, we really didn't have a 4% drawdown. I mean, this was our biggest one, which was about 3% right here on the weekly chart. And again, this is our biggest from peak to trough since basically we put in this low back here. And so again, that's not a coincidence, right? It's happening because we hit this major resistance. Now, again, this would be first target, about 11% drawdown in the S&P. Then I would analyze what we do off of that. Do we make a bear flag? Do we make a V bottom and shoot right back up? And that will help determine the next likely move on the S&P. All right, let's flip over to the NASDAQ because this is a very, very important chart. This is a chart showing a parallel. All right. So now this is a much shorter term parallel, which means the impact is shorter term, but it's still significant because all of these highs right in here, right across here, right here, and even the latest one where we put in our all-time high was right at that parallel high. We've come down and we've broken. Now, here we pierced and it got saved. Here we touched, and it bounced, right? Here we touched, it got bounced. This is different because in this scenario, we closed below. All right. So it was the first time we closed below this parallel. We then didn't confirm with a green gap down and a closed flat to positive, but we did confirm the breakdown yesterday. Confirmation, folks, for those of you that don't know, is a technique I developed to really solidify if something is a high probability breakout or breakdown, or if it's more of a 50-50. Oftentimes when you close above or below a line, it's just the algorithms trying to either stop you out of a short or get you to jump on the long side, and then they just take your money by rug pulling at the opposite direction. The idea is once confirmation occurs in a chart, the odds go to about a 70 to 75% reality check that it is a real breakdown or breakout. In this case, a breakdown. And so really this one right here, we didn't know. Once we get this candle, the odds favor a breakdown. And you can see again, today we flushed, we bounced back a little bit. Now, it doesn't mean, and I want to clarify this, it doesn't mean that we're going to crash, right? I mean, markets don't go straight down. And so if you look at charts, oftentimes once we confirm, you'll see like a little bit of a retrace to the scene of the crime. This is now solidified as major resistance, and then you get your next move to the downside. So that's kind of where I'm leaning on this. I think we could be due for a bounce. There are certain stocks out there that are getting oversold. For instance, Meta. Meta is one of my favorites here. I still think there's a little bit more downside on Meta. You can see this trend line on Meta going back to 2022 through April 2025 lows. Look at how close we are there. So what this tells me is that there might be a little short-term downside, but then Meta should bounce. Now, on the other side, we have NVIDIA, and NVIDIA reports earnings Wednesday after the close. And the reason why this is an important chart to watch is because here's a trend line, hits, kisses, bounces, pierces, bounces, pierces, bounces. Here it opened below, it bounced back above. Today may be our first close below this line. Now, remember, a close below does not mean it confirms a breakdown. It's a warning sign. It's saying, okay, this is starting to look interesting, like maybe there's a breakdown here. We need to see it confirm. Confirmation can occur tomorrow on Wednesday before they report earnings. If it confirms, the odds favor a break further lower. If it doesn't confirm, it's much more, like I said, 50-50, right? Once you confirm, 70, 75% odds downside would happen in this chart. If you don't confirm, 50-50, right? 50-50 odds. And again, that's really where we are on NVIDIA. But this would be the first daily close below this trend line on NVIDIA going back to June, where you have all these hits along this trend lines and pierces along the way. So this is a big deal. And NVIDIA obviously is going to be the big player for the rest of the week and even going forward as the AI trade has really started to crumble. You might say, what do you mean crumble? Well, look at Oracle. I mean, Oracle fell. Look at the fall on Oracle from the earnings high. From peak to trough, 39%. It negated the entire earnings move and even went lower. Now, it did hit support. I did buy some with Smart Money Stocks and ETFs members, which is at Verified Investing. If you want to join that service, we are in this trade on the long side off of this just for a little short-term bounce. But nonetheless, Oracle, a great example of the hyperscalers of the AI trade kind of starting to stall out. Other names out there that have really struggled, I mean, you can see even names like AVGO, which is still strong, it has broken this is its April low. And look, it broke and confirmed. Now it's getting a bounce, so it might go back here, and then you would expect a further rejection. So I guess suffice it to say, while we don't know what NVIDIA earnings will do at this point, it hasn't confirmed to the downside. The charts strongly indicate the semiconductors are likely going to go lower. Even if it's not on earnings, just in the next, let's say, weeks to month or two, it's likely the semis will go lower. And the last thing I want to show you guys is really the king of the castle here. And I got to show this to you because it's that powerful. If we flip over to the semis, I've shown this chart before, but it is probably the most impactful chart that I've ever come up with in terms of possibly marking a top on the market. And I've screened this one from the rooftops. We can very clearly see right here that in 2021, this is the SMH weekly chart. So the semiconductor ETF weekly chart. And this is your 200 moving average, weekly 200 moving average. In 2021, we got 102% above our weekly 200, and we fell 45%. In 2024, we got 102% above our weekly 200 moving average and fell 40%. And just a few weeks ago, we topped out 102% above our weekly 200 moving average. And look, all of a sudden, selling as it's pulling price back down. And that has me thinking that this isn't, listen, you're going to get a couple weeks that are green, right, just from bounces. But I think the cycle top is in here on the semis, and we're going to likely correct as much as 30 to 40, maybe 45% on the semiconductor. So keep that in mind, guys. I think that's super, super, super important here. This, again, is a powerful chart. You mix this chart showing a top with the S&P 500 chart with the parallel. And I mean, it's hard to dispute, at least based on charting, that the markets are at a pivotal top. Even if we do get bounces along the way, the odds of a new all-time high, to me, seem very slim. All right. And again, chart analysis 101 here. All right, guys, I'm going to get going. I will keep you in the loop. Thank you guys so much for tuning in. If you find these helpful, please share them with friends and family. That's all I ask. And I'll keep bringing you my A game. You guys have a good one. Take care.